What's up, YouTube? Welcome to the channel. Welcome. If you haven't yet, like and subscribe. But not yet, only after if you've watched the video. If you liked it, then you can like and subscribe. Guys, I just want to do a quick video and talk about failed analysis. So obviously, yesterday, my analysis was not 100% correct. And I am very happy about it. It might sound strange. Why are you happy your analysis was wrong? Well, the point that I want to make is that analysis can be paralysis. Analysis paralysis. So often we make analysis, we have predictions, and then it just miserably fails. Then you question yourself: What did I do wrong? What what did I do something completely wrong? Did I miss something? And the question we have to ask ourselves is: Did we overanalyze? Did we forget to react? Or just did our edge just not play out? And it's just one of those days that price action is not playing along. And that happens. It isn't always perfect and it isn't always exactly the way you want it to be. And that's part of life and that's part of trading. So today, I just want to quickly show, I can't exactly remember the analysis, but I'm going to quickly talk about a few of the things that I was looking for and then what I missed. And yes, let's have a look at it. So I'm going to go to the 1 hour quickly on GU. So I think I remember I anticipated price. We were in this area. Let's just look where 6. So there was the start of the new day. And I was expecting price to make a pullback, and then potentially go higher. I also mentioned that if price makes a pullback into wherever the region was, we would want to see price creating an entry where we see a complete structure shift first before taking a long. We want to first see price creating new structure, making new higher highs, breaking previous higher previous structure. That's what we wanted to see before we take an entry. We want to see that confirmation. So there's no need for you to have entered because we didn't even get this confirmation. So there was no entry. So basically it was just a no trading day. And then afterwards I tried to figure out why price broke down towards the downside. Because always in hindsight they call it perfect sight. So not always true in trading, but I tried to figure out why price broke down towards the downside. So on the 1 hour, this is me now trying to figure it out. We have this swing point, price pulled back into a range over here, but there's nothing clean or clear for me personally. You might have a different way of looking at it. So price reacted off of this zone, but again, there's nothing solid or clear in this area. You guys know I like to see price creating relatively full body candles with impulsive moves out of it. So if price reacted off of this area, this one, it's not a full body candle on lower time frames maybe, but nice impulsive move outside of it with a structure break over there. If this was the case and price reacted off of this area and then went down, then I would have had more cause to think yes, price is bearish and we're going down towards the downside. When this happened, I initially thought that okay, we had this equal lows, we swept it, we pushed towards the upside, then we had this structure break, and I was expecting price to move up higher because also if you look at this swing point, we already reacted off of 50% below and we accumulated in this area to move up higher. So that was the general idea for me, was just to target these highs and then see price maybe react off of these highs and go up into that area. So I think that was more or less my thought process behind this setup. But that did not happen. So let's look at the 15-minute and let's review what did happen. So there is our Asian session. The price broke above the Asian session. We can just mark that with a nice box. We can give it a color. Price pushed up above the Asian session, and where did it react off of? So we had this high, and then we had this zone as well. So yes, probably in hindsight, that would have been a better area to look for sells. But if your higher time frame view is more bullish, then you're not necessarily going to look for sells until you're very good to be very reactive, not predictive. So I'm not yet there yet. So I'm just still working on it. Nice push up into the highs. So probably this is where we could have spotted something on the lower time frame. Let's look. Let's have a look at the 3 minute time frame. What happened in here? So we had this push up, we pushed down, then we had a higher high, then we broke structure towards the downsides. So probably this was the first structure break. We created a low, a high, liquidity high, and then there was our entry. Let's just clean this up again. Okay, so in hindsight, this is how I learn, and this is how I try to get better than sharing this with you now. Probably this could have been an entry. We had a structure break down there, also a minor one there as well, very minor, but we had a strong minor structure break. So it's not a because where's the next major structure break? This is the next major structure break. So it's quite low. So we need to look for the minor structure breaks. So if we're looking for the minor structure breaks, we want to see strong minor structure breaks with liquidity being formed. So that's a rule that you can give yourself. You can apply it to your trading. When you have when you're seeing minor structure breaks, you want to see it strongly break and then liquidity being created. This was then the liquidity area that we were looking for. We saw that and then price pushed up. We had some 3 minute imbalance there as well. And then that could have been the first entry. I might say as well, it would have been an relative aggressive entry. If you took 50% of it, you could have had a very tight stop loss and then saw price really dump towards the downside. After this, on a 3 minute, there weren't a lot. Okay, maybe this one. Wait, let's see. This could have been an entry. Maybe, possibly. Just tapped in. And then we had another structure break. Here we had a structure break. So maybe this was on the 1 minute. Let's we're gonna jump now to the 1 minute. We're just gonna review reverse price a bit and then jump to the 1 minute and see what happened. Potentially this could have been an entry and then a structure break here and then we only came I would have wanted to see price go to that or that area, so I would have been missed in this trade. Or if we created this liquidity high, then I would have wanted to see price push down and then go up. So that would have been a good setup for me, but we didn't get that. So we missed that one. Let's follow. So in this area, price only reacted off of the imbalance after a structure break. So there's our structure break towards the bottom. Price reacted off of that. And then, okay, this could have maybe been an entry if we just followed the price moving down, where we had this liquidity high, we had a strong structure break towards the downside. This whole move was relatively impulsively and strong. Liquidity and then price pushed up, failed to go higher, and then we saw the sell-off. Then here was another one where we could have found an entry, maybe potentially another potential spot. Um, so already we can see there were quite some areas where we could have found ourselves an entry. May it be on the 1 minute or the lower time frames or wherever. So let's just find ourselves again. Okay, this one was nice. You see it came back, didn't go above, tapped into this area. A lot of accumulation. So whenever you see accumulation like this around an order block with a structure break, know the price could still go up and then go down. So nowhere in this whole price action did we see clear impulsive structure breaks towards the upside to take longs from. Impulsive move up, didn't break anything. Impulsive move up, only break this structure, but only to reach this order block. Nothing more. And we see prices continuing towards the downside, all the way towards the down. So let's just get ourselves depressed and see what we missed out on. Well, what I missed out on. I'm really hoping that some of you caught this. That would have been wonderful. So really hoping for that. Just get myself here. So this entry would have been right there. Let's say we had a 3 pip stop loss. Let's be nice. And if we just targeted previous lows, we would have had 18R in a matter of a few hours, 2 hours. If we targeted the next previous lows, 34R, and then if we went to the 1 hour and we just let it run, we would have been sitting now in 50R risk reward profits. So, guys, that's just quickly reviewing GU and how what I missed, how I could have viewed it better. And I do these kind of videos I do it to myself as well. I don't always post them, but I decided to post this one. I do these kind of videos for myself to review them, to get an understanding of what I missed and how can I improve next time. So I'm building the story, talking to myself visually, explaining to myself what I missed and how I could have viewed it better. So some of the key things that we can take away from this is when we have minor structure breaks, it needs to be impulsive. We need to see them impulsive. We need to see liquidity built above or below our review. So those are some of the key things that we can take away from this trade over here. We can also add that we okay, so if you missed the initial entry, just follow the order flow as shown. So if you missed that initial entry, just follow the order flow as I've shown earlier, and you just continue taking shorts all the way towards the downside until you are proven wrong and price is moving again against you. So guys, that is it from this short case study breakdown missed opportunities video. I hope you enjoyed it and I hope it made sense. I know it's hindsight, absolutely. This is just me reviewing my mistakes. So reviewing my mistakes, learn from it, and yeah, see you guys in the next one. Cheers.